warm welcome to today's webinar on the fine print of health insurance presented in collaboration with GreyUp. Before we begin today's session, we have an exciting announcement. Join us for Hiriara Habba 2025, a vibrant festival celebrating the golden years on Sunday, 23rd November 2025 from 9:30 a.m. to 5 p.m. The venue is St. Joseph Institute of Management, Primrose Road, Bangalore. Enjoy a full day of cultural programs, senior-led stalls, games, art, food, and more. Win silver items and prizes worth rupees 50,000. Entry per person 100 onwards. Reserve your spot now and be part of this joyful celebration. For booking, please contact 95133 I repeat the number, it's 95133 Health insurance can often feel complicated, especially for seniors. Many first discover the limitations of their policies only at the hospital billing counter, while others struggle to even get coverage due to pre existing conditions or confusing policy options. This session, The Fine Print on Health Insurance, aims to help seniors understand their policies better, avoid common pitfalls, and ensure their claims are never rejected for preventable reasons. We are happy to welcome today's speaker, Mr. Rahul Venuraj, founder of GreyUp and alumnus of IIT Kharagpur and NUS Business School, Singapore. Rahul has had an impressive career spanning global roles at Siemens and leadership positions in India's EdTech sector, where he helped over million children learn better. Through GreyUp, a movement he founded with a team of IITians, Rahul is dedicated to supporting seniors in safeguarding what they have built over a lifetime, their health, wealth, and happiness. The initiative focuses on empowering older adults with clarity and confidence in critical areas such as health insurance, will making, and tax planning. We are delighted to have him lead today's session on the fine print of health insurance, an engaging and practical discussion designed to help seniors to make informed, confident decisions. Over to you, Mr. Rahul.
All right. Thank you. Thanks, Ashwini, for that introduction. I hope I'm audible and my slides
Yes,
can be
yes, sir.
seen as well. All right.
Yes.
Perfect.
You are
So,
audible, sir. You are
all right.
audible.
All right. Thank you. Thank you, sir. So basically, yeah, just to reiterate, firstly, we are not a health insurance company. Okay. So we're not here to, support them or say something bad about them. We're not representing any hospitals. We are basically representing seniors, right? And GreyUp is basically a movement to help senior citizens in several things that we think are important post-retirement. So we call them retirement essentials. Of course, health insurance is one such tool. It's a very important tool for people, in fact, for all ages, but definitely beyond maybe 50, 45, 50 or so, because there is definitely a higher and higher likelihood, as data shows, of reaching hospitals. And unfortunately, the bills in India are getting astronomical. However, it's a very complex product. And so before we proceed on other things, let's first understand why health insurance in India is so complex. Before I start, I just want to say that we have quite a bit to cover, and I'll try to do it as free flowing and logically as possible for all of you to understand. It doesn't matter what your background currently is on health insurance, how much you know. And if you do have any questions, feel free to put it in the chat box. At the end of the session, I will take about 40 minutes or so to finish speaking, and then we will definitely ensure that all questions are answered before wrapping the session today. Okay, so let's begin. So firstly, most of you will be belonging to one of these four categories. Okay, either you have bought a policy on your own, or you may be covered by your child's corporate plan, or third option is that you are covered using other sources. Like sometimes banks give policies, alumni associations. I'm from IIT Kharagpur. We have an alumni association policy. Or on the other hand, for one reason or the other, you may not have a cover. Okay. But irrespective of that, I am confident that all of you will have takeaways today by the end of this session. Okay. So first, let's understand, come back to that question, right? Why health insurance is so complicated in India. So if you go abroad, if you have, for example, a $100,000 policy, it's very simple. If your bill is less than $100,000, it will be fully covered. If your bill is above $100,000, let's say $150,000, then $100,000 the company pays, and $50,000 is paid from your pocket. However, in India, you would have probably experienced or at least heard of instances where this is not exactly true. So, to understand the root cause of this, the main issue here is there's something called medical inflation. Okay, so now most of us know what regular inflation is. So most of the things in India are increasing in price year on year by about 5-6% or so. But medical inflation is the rate at which prices are increasing, particularly in the medical sector. And this is 14% in India, not just last year or so. It's been 14% for many years. It is not one of the highest, but it is the highest in Asia and one of the highest in the world. So there are some other countries like some South American countries like Brazil, Ecuador, etc., that have slightly higher. Okay, now what does this 14% mean? So if you actually do the math, if something is increasing in price by 14% every year, every 5 years, the prices of everything will double. So that means if there is a surgery that today costs maybe 7 lakh rupees, in another 5 years, by 2029, 30, it will be about 14 lakh rupees. And then it will be closer to 30 lakh rupees in another 5 years if this doesn't change. Okay. And there are many reasons for this. One is, of course, the general inflation itself, the costs, the raw materials, the costs, the medicines, all that are getting more expensive by about 5-6%. But then there's another side of it which increases it from 5-6% to 14, and that's the high demand in India. We do not have enough hospital beds for the kind of population we have. There are also the demand for services has gone up. One is post COVID-19, there's been a lot more preventive healthcare that people are taking seriously. The second is lifestyle changes, right? So we opened up our economy 30 years back, and our food habits, our work habits, everything has changed in the last 25 years or so, and hence we are seeing those effects now 25 years later. We are the diabetes capital of the world. Nothing very proud about that, but it is a fact, right? And we are not too far behind in terms of, say, cholesterol, high blood pressure, etc. Okay. The last reason for the increased demand leading to this kind of inflation is medical tourism. So we have fantastic doctors, excellent hospitals, at least in the cities, and all are English speaking. Most all of us are English speaking. So we are a very prime destination. I live in Bangalore, for example, and you can anytime I go to the hospital to visit someone, I see a lot of foreigners. Will be surprised to see, and you will also be surprised to see the number of foreigners in most, at least, metro city hospitals. Okay, so the net of this slide is that it's 14%. It's growing alarmingly high. And how does that impact all of us? So the first impact, obviously, is a rise in medical expenses. So the medicines that we buy, the medical equipment, hospitalization, of course, and even caregivers like nursing, etc., all is getting more expensive by about 14% every year. But the second critical thing, right, which is more relevant to this conversation is health insurance premiums also rise. Okay. So please remember the question that I started with, why health insurance is so complicated in India. So when health insurance premiums are rising, because why does it rise? Because if everything is getting more expensive every year in the hospital and insurance has to charge me some yearly amount to cover that, obviously that is going to also rise. Okay. But the challenge or the interesting thing is that health insurance is a very low penetrated product in India. Not even, I mean, it's in single digit, not even 10% of India have health insurance. So it's a virgin market. There's a lot of competition. So all these insurance companies in India, we are at that stage where they have to increase the premiums because of the rising costs, but they don't want to increase the premiums. Okay. So what is the solution to this? So there's a pressure coming to increase the premium, but they don't want to because they want to compete with other companies and get higher market share. So what happens is, in reality, is there is no insurance company gives one single policy which has only good features. You don't see such a policy. So instead of that, what they do is they make many variants of policy. So some policy will be good for maternity. Some policy is good for Ayurvedic hospitals. Some policy is good for maybe waiting periods are a little less. Some policies cover most all kinds of hospitals. Okay, some give free health checkups. So etc. etc. So there are a lot of different features that they are chopping and changing, to make sure that they can keep the price in control. So that is the biggest problem. So by the end of today's session, what I would love everyone to understand is what are some of these key features that we should definitely have in our policies, and some of the key features we should definitely not have in our policies, especially from a senior citizen's lens. Okay. So let's look at an example, right? So here's an example. So what goes wrong? Let's try to understand with an example. If we don't choose the policy correctly, if we choose the wrong features, what can go wrong, right? So let's try to understand that. So here's a situation where this person has taken a policy for 15 lakh rupees. Okay. And so, and this person is got admitted in the hospital, and this is what the bill is. Okay. So the total bill has comes to 6 lakh rupees. I'll just go through the breakdown of this. The person was in hospital for 7 days. In this, the room that the person took was 10,000 rupees per day. So 70,000. ICU charges were 20 out of the 7 days, 3 days were in ICU, unfortunately. 20,000 per day. So 60,000. A surgery was eventually done to treat the patient. There was 2,50,000. Tests, a lot of tests are done before the surgery and even sometimes after the surgery, post-operative tests. Everything came up to be 1,20,000. A bunch of medicines were used, 60,000, and then doctor's visits. So doctor usually 7 days this person is in hospital. Doctor usually comes twice a day. Once in the morning to check on the patient, once at night also to check on the patient. So 14 doctor's visits, 3,000 per visit. So this is the overall bill, 6 lakhs. So imagine, someone pays this amount and is going to the insurer now to to reclaim this amount back. And the person has a 15 lakh cover. So for most of us, this is an open and shut case because the bill is not even half of the cover. Okay. So I would expect, before I got into this, that I would get this entire 6 lakh, because obviously I have a 15 lakh plan, much, much higher. So then you go to the insurer. First thing insurer will say, sir, first thing I want to tell you is this room rent. Okay. If you actually go to your policy, you will see that it's clearly mentioned that room rent limit that you can take every day in the hospital is 5,000 rupees per day. Okay. But what you have taken is 10,000. So you will be surprised. You'll say, what, really? There is a capping like that? You say, yes, sir. You may not have read it, but it's definitely there. Please go and see it. And if you actually go and see it, you'll probably see it as well. So 5,000 per day. So you're like, okay, fine, no problem. That's okay. So instead of giving me 10,000, instead of giving me this total 70,000, you give me 35,000. That's fine. Right. So you give 5,000 per day, you give me 35,000. I'll put from my pocket, no problem. You give me this 5,67,000. Still, it's not bad. In fact, you may be happy that you took a better room because your family was comfortable, maybe the patient was comfortable, etc. So that's okay, right? Then the insurer will say, okay, sir, that's fine. But then there's also one more thing, the ICU charges. If you again go to your policy and see, ICU per day charge that is can be covered is 10,000 rupees per day, but you have taken 20,000 per day. So now you're like, oh, okay, this also is there. So yes, sir, please read the policy document properly. So ICU charges, now what will happen is instead of them giving 20,000 for this, they'll give 10,000 per day. So 3 days, they'll give 30,000. So now instead of this 1,30,000, these two, you're getting half of it. Okay, that's okay. Still, it's, I would say, not too bad. It's still in okay category. Ideally, we should have got 6 lakh, but in this case, we got 5,37,000. Okay. Now, everyone here on this call, if you forget everything that I say today, please don't forget the next point. Okay. So the next point is a very critical clause which is there in pretty much all policies in India, but no agent will tell you. No insurer also will never tell you. Hospital also doesn't tell you. But it's there, and that clause is called proportionate deduction. Okay, so this is the next restriction he's going to bring. So what is proportionate deduction? Okay, so please don't read it; you'll get confused, maybe even more. So what proportionate deduction says is, I'll try to say it slowly so you understand. What it says is whatever percentage of the insurer is saying by this clause, whatever percentage of room rent I'm covering, everything in your bill other than medicines, I will cover in the same percentage. Okay. I hope that's clear. So I'm just repeating. What the insurer is saying by this clause is whatever percentage of your room rent, like you have a capping and you have taken a room, whatever percentage of room rent is covered, everything in the bill other than medicines, medicines is on MRP. Everything else will be covered in the same percentage. Okay. So now we'll come back to what impact that has on our example, but let's understand why such a funny thing, right? Why can't they just charge the difference in the room rent and pay everything else, right? That's what we would expect. And the reason for that, so we went to hospitals to ask them, why do you do such a thing? I mean, sorry, we went to insurers and asked them, why do we, why do you do such a, it doesn't make sense. So then they told us that actually, which was news to us when we first understood, every hospital in India, actually, if you go there, you will see that they have differential pricing. So the same doctor going and saying, how are you, sir? Are you feeling better? Is the pain okay? Doing that consultation. In one room, the cheaper rooms, let's say the general ward, it'll be only 800 rupees. And then he will just go across the corridor to another room in the same floor, which is a executive room. There the charges will be 3000 rupees. And then it can be in another room, it can be 4500 rupees. Okay. So everything from surgery, your medical tests, your doctor's visits, nursing charges, whatever, except medicines. Okay. So medicines, the regulatory body, IRDA has said you can't do anything there. That has to be on MRP. So that is okay. So what there's a fixed MRP, and irrespective of the room, medicine cost will be same. So that's why here they will not put proportionate deduction on medicines because it's the same whichever room you take. But everything else will be uh, differently priced. So what the insurer is saying is, look, you and me, we had a deal when you took this plan that you will take a 5,000 rupees room. And if you had taken within that 5,000, I would have paid everything because all the charges in that I've already considered. But you have taken a 10,000 room. So everything has become expensive. The surgery has become much more expensive, the doctor visits, everything. So that obviously the insurer is saying that I can't take that because that's extra payment from my side. So that is the reason why we do proportionate deduction. So then when we heard that hospitals are having differential pricing, we went to hospitals also to ask them, why do you do differential pricing? And now we have understood that this is not something for India alone, but in most developing countries. Okay. uh, these countries have one key challenge, that is they have to ensure medical equality. So one thing I think we will all agree is that the best healthcare should not only be for the rich, right? It should be even the poorest of poor should ideally be able to afford, if possible, good medical care. It's a right for everyone. So what happens is, so imagine in a hospital, okay? So if 100 rupees, something is at 100 rupees, now, if it's fixed at 100 rupees, then you know how India is. It's like almost developing countries, like a pyramid. There are some very rich people, super rich here, then more than average rich. And then as you go down, it becomes like a pyramid. Okay. You get more and more people at the bottom. Okay. So if you keep some price at 100 rupees, a large section of this pyramid will not be able to afford 100 rupees if you keep it fixed. And then they can't get access to that medical care. So what hospitals do, instead of charging everyone 100, some people they'll charge 20, some people 60, some people 100, some people 140, and some people 180. Now, if you do the average of this, the hospital will still get 100. So hospital is not losing any money or making any money in this process. But because you have this differential pricing, lot more poor people can gain access to that service. Okay. So uh, so for us, it's very important to keep that in mind, and we are part of this India where we will be developing for some time. And I think it is very important that everybody has access. Now, this 20, 60, 100, 140, 180, how do they charge this? Through rooms. So based on the room you take, which kind of little bit shows your ability to pay, the different rates are fixed. Okay, so even the surgery. So if you think a surgery is not, you can go to some hospital and ask, based on the room, your surgery price will also change. So it's not really a scam. It's not unfair. Actually, both sides have a valid reason why something like proportion deduction is there. Of course, I agree. Insurers can be more transparent in telling this when you're buying a policy. Hospitals can also be more transparent when you're taking a room, when you're getting admitted or you're admitting somebody from your family. They can be more transparent on what is the consequence, or what will happen if you take a higher room. They don't say. So anyway, hopefully now you know that there's something like this. So the onus is on us, the potential buyers. We need to buy policies carefully. where the room cappings are not very strict. Otherwise, we will really, really fall for this. Okay. So going back to our example now, we had stopped here. Now, if we put proportionate deduction on this, so how will we do the proportionate deduction? The room rent we have taken is 10,000, but the room capping, the maximum room the policy says it will cover is 5,000. So that means 50%, right? They're going to cover only 50% of the room rent. So everything else here, except medicines, which is the last but one line, is going to be covered 50%. This in this example, okay? It could be 30%, it could be 80%, but 50% is also quite common. It's not like I'm not saying some unthinkable example. So now you see everything has now changed. The full picture has changed. Now that 6 lakh, what we were expecting to get is now slightly over 3 lakhs only. And all this has happened because of room rent limit and proportionate deduction, which is also room rent limit. So basically all these deductions that you see on the screen right now is due to room rent limit, directly or indirectly. Okay. So this is the scenario, right? 6 lakh 2,000, but you're getting 3 lakh 31. And then just when you're very upset, I'm sure anybody would be upset at this stage because the person had a 15 lakh cover. The person didn't have a 5 lakh or a 6 lakh cover. The person had a 15 lakh cover, right? And then the insurance is a one last thing. So you also took co-payment. Co-payment is basically when you take a plan to get little bit discount in premium, to get 1,000 rupees, only 1,000 rupees will get discount. There are a lot of people who basically take a policy where they are ready to share the costs. Okay. So it could be 10%, 20 or 30%. Okay. I've seen it. But it's not a good thing to do because, like you can see here, just because of saving that 500,000 rupees, what happens here, right? So in this case, there's 20%. So this 20% co-payment, please understand that is 20% of what? It's not 20% of the bill. It is 20% of what the insurer has to pay. So the insurer, your policy has a lot of terms and conditions, right? At the end of that, when the insurer will calculate what is the insurer's part. So we calculated this is insurer's part. 3,31,000 was supposed to be insurance part. At that last stage, last step, they will check if co-payment is there. If it's 0%, fine. They'll pay 3,31,000. If it's 10%, they'll cut another 33,000. But in this case, there's 20%. So finally, we are reached. This is our final number. So basically, having a policy of 15 lakh, getting a bill of 6 lakh, but getting only 2,65,000, which is around 56% is coming from your pocket, and only 44% is covered. So please, so this is, as you can see the title, this is risk one, the most common problem that you may face in health insurance is partial coverage. Means insurance is ready to pay the money, but they'll do some calculation like this, and ultimately you won't get the full money. Okay, so we'll come to solutions after we see risk two. There's one more risk, and then we'll come to solutions. But please make sure that whatever happens, uh, you remember this point. Okay, that the room is not just for comfort. The room can drastically change how much money you get back when you're getting discharged. Okay, the second problem that we see, that's a rarer problem. It's not as frequent, but if it happens, its extent is very high, right? The damage that it causes is very high because you're getting zero. So there are some reasons, there are some cases where the insurer will say, I will not participate only in this claim. There is no calculation. I cannot participate for certain reasons. Now let's look at what those reasons are. The first reason is pre-existing diseases. See, when we take a policy, even if you have taken it 10 years back or 15 years back, the insurance company asks a lot of questions to evaluate our health. And at that time, we have to just say the facts. What happened, what didn't happen. We Many people share their opinion, but it was not my major. I don't have any issue now. And then sometimes they don't tell things which they should otherwise tell. Okay, the insurer is actually taking a huge burden, right? At the end of the day, you may pay 40, 50, 60,000 rupees. They have to pay up to 10 lakhs every year for you. So obviously, right, for a person who's going to really get big bills, it's very beneficial. But the insurance company will want to do it only after evaluating your health. So please be 100% honest. And if required, always take a medical as well. Okay. Don't be scared to take a medical. It's good only. It's good only if there's a medical, and if everything you give the report to them and say, here, these are all my blood parameters. Now you only tell me what is possible, not possible. That will save us at the time of claims. You can avoid a zero claim. The second reason is waiting period. So when you buy a policy in India, always there'll be some waiting period, not just in India, anywhere in the world. Why? because otherwise people will take policies only when the disease comes, right? So then insurance can never work. If imagine all of us, nobody has a policy, and only when disease comes, you're ready to pay 50,000 or 40,000 or whatever to the insurer to get 10 lakhs every year. Obviously, the system won't work, right? So please, you should know your waiting periods. There are three types of waiting periods. I will not get into it now, but if anybody wants some clarity on that, I can do it at the end. Please feel free to ask a question. Okay. The third, very important for senior citizens, is modern treatments. Okay. So when you go to a hospital these days, there is a bunch of different treatments which are called modern treatments, or some people call it advanced treatments. Okay. So what are some examples? Robotic surgeries is an example, right? So if you have any surgery to sensitive areas like the brain, the spinal cord, the groin, the inner parts of the heart, etc., where a 1 millimeter shake of the hand can also have severe consequences to the patient. So these days, doctors, robot doesn't mean a robot will do. Doctor will control like a remote control kind of a thing, and will do directed uh, surgery using that arm, that robotic arm. Okay, so and it's quite common now. In fact, 5 7 years back, you never hear much about robotic surgeries here and there, but now every hospital has a robotic surgeries department in Bangalore at least. Okay, so it's so common. So many of your surgeries can end up being that is expensive. It's not cheap. So please, so that's example one. Another common example I can say is oral chemotherapy. So as you know, for cancer, one of the most common treatments is chemotherapy, right? In addition to radiation and surgery, surgical this thing extraction, there's chemotherapy. Now, chemotherapy. What is chemotherapy? You inject chemo, that chemical, into the body through the veins. So you take the patient to the hospital for multiple sessions, maybe once a week, maybe multiple days in a week. It's a very harrowing experience for a senior citizen. You feel, you lose your spirit. It's not an easy thing to sit there with other cancer people all around you in one big hall, sitting there for hours and getting chemo. Second thing is, of course, you get exposed to different diseases because you're going to the hospital. So you're taking a cancer patient to the hospital. So there can be other illnesses in the air. So, it's not a great idea. And the third thing is, there are a lot of side effects that chemo has. So there's nowadays an option called oral chemotherapy where you don't have to take the patient. It's not there for all cancers, but every day more and more cancers are getting this option where a patient can just watch TV at home and take it with a glass of water. Okay, and the advantage of that is, of course, you don't have to go to hospital, no trauma, no risk of exposure to other ill diseases over there. But most importantly, most chemotherapy has a lot of usual chemotherapy has a lot of side effects like loss of hair, nausea, loss of appetite, blisters on the tongues, scaling of the skin. There are lots of ways in which the body adversely reacts to chemo. So, in oral chemotherapy, the side effects are about 90% less. So, usually, if that's an option, if people have good money or if they have a good policy and the doctor gives it as an option, you will likely to go with it. In fact, some of my friends, they have taken loans also, sometimes to help their parents with this. It's they're expensive. So, third point is you need to make sure your policy covers modern treatments, not just covers, but covers without any restriction. Okay, it should, without a restriction, it should cover modern treatment. Okay, otherwise, if your doctor tells modern treatment to take modern treatment, you will end up getting zero. Okay, the next thing is we will be very clear what insurance is and what it's not. A health insurance policy is for hospitalization. Okay, it is not for regular doctor's visits, and it's not even for just going to the casualty, getting a drip and coming back usually. It's mainly for, there is a procedure, there's a surgical procedure, or you have some illness which needs continuous monitoring in the hospital, and these procedures are what is covered, and that is why we take insurance. We are not here to take some product which will just cover 500 rupees for this, 500 rupees for that. That's not the reason why we take health insurance. So please be careful and be clear that this is what is the reason we are taking health insurance is for saving us from financial distress. 500 rupees doctor visits is not going to lead to financial distress for most people. But 8 lakh bill for bypass surgery, heart bypass, can have a big severe impact. Okay. So that's the third thing. Fourth thing. The next thing is intimation delays. Now, unfortunately, in India, with health insurance, there are a lot of frauds. Okay, there are stories where fake bills are made, fake patients, and these kind of things happen. Maybe little less in tier one, that is metro cities, but it definitely happens in tier two, tier three. There are lots of cases and lots of complaints on these things. So the insurer basically has the right, as per the policy, any policy, to actually visit the patient if required. If they have any doubt, they will only 99, 90, 95% cases they don't visit. But if they have a doubt on the hospital, no, they can come and visit. Now we don't know no, whether they have a doubt in this hospital or not. So always intimate the insurer as soon as possible. If it's a planned surgery, 2 to 3 days before the surgery, if it's planned, right, for next week, then you should tell the insurer that I'm planning to do this surgery. This is the hospital, and please start the process. If it's unplanned, means emergency, right? In emergency, within 24 hours, this is a point that many people miss out. They forget to do that. But it's very important that within 24 hours, a family member or somebody informs the insurance company. Okay. And if it's a cashless network in the hospital itself, they'll ask you for insurance, it's fine. But many cases, you may not be in a cashless network in an emergency. Because in an emergency, you will go to the closest hospital wherever you are, wherever you're fallen or wherever an accident happened, you'll go there. You're not going to look at which is cashless, not cashless. That's where a lot of cases sometimes people forget to intimate, and then it becomes a problem. Okay. And last but not the least, so just like this, I told you, like, there is a lot of fraud in India. Every insurance company has a list of blacklisted hospitals. Okay. Just important. It's only a 0.5% chance, I would say, that your the hospital you go to is blacklisted. But if it happens, you may not get lakhs of rupees. So it's a 5-minute job. Open the website of the insurer or call the insurer and say, I'm planning to do in this hospital. Is it blacklisted or not? Please check this. I work with senior citizens every day, and I know that there are cases in my circles itself where this has happened a couple of times. Okay. So just be very careful. When you go to the hospital, if they are accepting your insurance, that means it's not blacklisted. That's fine. The problem is when they're not accepting, and let's say it's only 2 lakhs, and you think, oh, 2 lakhs only, I'll pay it. I will reimburse. After that, let the surgery happen. These kind of cases where you may have the cash or you have a credit card or whatever, and you're assuming, you're not checking, you're assuming that this is a valid hospital, so my bill will definitely be covered. Don't assume that. Please make sure your hospital is not blacklisted. Last but not the least, of course, if there's some incorrect information in the form or missing documents, or even if your policy lapses by 1 day, this case also I've seen, unfortunately, 1 day, right? You always make sure you renew your policy on time. There is always a grace period of 30 days where you can continue the policy. It will not break. But in that grace period, you know, if something happens before you paid for the next year, it will not be covered. Okay, you'll get continuity. Once you pay, it will continue, not break. But in the grace period, the number of days after the this thing will not cover. Okay, so this is risk number two. Okay, so these are only the two risks. What can go wrong with health insurance? Only this can go wrong. So it's a financial tool ultimately to cover medical expenses. Either they'll give you partially or they'll give you zero. If you're getting, the third option is they pay you fully. That's a great scenario, right? So these are the two things. I hope these things are clear. Okay. Now, whatever I've spoken today is relevant to anybody's insurance policy, an 18-year-olds or 25-year-olds. I am 45, my policy, and for senior citizens. It's common. All these points are common, nothing special for seniors. But the reason we are focusing at GreyUp, we are focusing, and Vayah Vikas has also helped us do this session, is because we understand for seniors, the chances of going to hospital is much more, because it's just a way of life. It's a fact of life, rather, that at a certain age, maybe for someone it's at in the 50s, some other person in 60s, someone in the 80s. But there is the body, functions in a certain way and it degenerates at some rate. And hence there is higher incidence, higher frequency of number of times of going to hospital is more for seniors. And the diseases also are a little more severe. Usually they are chronic, like diabetes, high BP, cholesterol, problems with the lung, problems with the kidney. Usually that's what happens for most senior citizens. Some organ in the body starts malfunctioning first. Someone's lung, someone's heart, someone's kidney, someone's liver, someone's knee. So once that happens, there are multiple visits to the hospital. So the costs are also higher. It's recurring, and each visit's costs are also higher. And of course, our senior citizens, most of them, they have limited income. Yeah, they hardly have income, if any. So this combination is very dangerous. So if you get a wrong policy or do the wrong steps here, you can get massive wealth erosion. And that also I've seen people then are being depressed after that, sad that the kids had to spend from pocket and all kinds of other things. But all this can be avoided. The good thing is with timely action. Okay, now I don't know if it's timely enough for everyone on this call today, but we'll try our best to see who can be helped and who it may be a little late, but we will try our best. Okay, so but we'll come to that. Okay, so this is so far we have looked at only problems, right? The partial coverage problem, the zero coverage problem, and why it's important to and why these are critical for seniors. So now let's look at some solutions. So the first solution, no, the first step, which is kind of obvious, is we need to choose the policy correctly. Okay, if you choose a bad policy, which is very very just to save some money, if you cannot pay, like, see, if you cannot pay, no, get the best policy you can get. That's fine. But most people I know, they can pay. They are paying for many other things, much higher. But insurance, they consider it a waste. Every year when nothing happens to them, they think that oh, my money got wasted. I think it's a unfortunate way of thinking, because if the money got wasted means you're healthy, and I think that was a good year. That's not a bad year for the person. And you'll realize this when more and more people, you see the kind of diseases they are having these days, and younger people. Okay, so let's look at what are the first three things that we should definitely avoid. Okay, your plan should not have this. First, we discussed is room rent limit. So there are policies in there. So what is the solution to proportionate deduction? The solution to proportionate deduction is to take policies with no room capping. So if your policy says any room, no room capping, then does it matter? Whatever room the hospital gives you, it will be 100% covered. So once the 100% room is covered, everything else will also be covered 100%. I told you, it will match. Whatever room rent percentage is covered, everything else other than medicines will be covered. So the solution to this is to get policies. Yes, you do have to, you may have to pay 2, 3, 4,000 extra for that, but it is 100% worth it. There is no doubt about it. Okay, so that's first thing. This, please also remember, I'm just sticking to room rent again. Room rent is not in our hands. When we go to the hospital, usually the person will say, this is not available. I don't know if you have experience. They'll say this is not available, so that's not available. And your family member is waiting in the lobby to get admitted. You're not going to fight with them that time, right? Or you're not going to turn around and take U-turn and go to next hospital. I mean, this is all not practical. We will take whatever they give us. So have that peace of mind that I don't care what they give, I will. This will not cause any problem with my bill settlement. Take a policy with no room. So avoid room rent limits in your policy. Second thing to avoid is co-payment. We discussed this. Just to get 500,000 rupees, please do not agree to share the bill with the insurer, because we don't know the total size of the bill, and you lose lakhs of rupees like we saw. Okay. In India, the mistake people have is there's some weird calculation they have that, okay, my policy cannot be more than this much amount. They will tell the agent, I won't give more than 40,000 or 30,000 or 50,000 or whatever. Then the agent will go and put some clauses there. You not even realize who reads the policy. Out of 100 people I meet, maybe 2 people I know who actually read the policy when I get it. 98 people don't read. Okay. So please make sure there's no co-payment. Third thing, which we didn't see in the example, the first two we saw, is something called disease sublimits. Okay, very dangerous thing as well. A lot of policies, what they say is, so for example, let's say you are a couple, husband and wife, and you have a policy for 10 lakh rupees, example. So a lot of policies, what they say is, this 10 lakh coverage is an overall coverage for you and your wife for the full year. Okay, overall coverage. But if cancer comes, I'll give only 2 lakhs, not 10 lakhs. I have a 10 lakh. So 10 lakh is for your full coverage. Cancer comes, I'll give 2 lakh. Or knee replacement, I'll give only 1 lakh. Or cataract for the eye surgery, I'll give only 20,000 per eye. So these kind of limits, which are under the 10 lakh limit, so you have 10 lakhs, but they're not allowing you to use the 10 lakhs fully for different diseases, are called disease sublimits. Please avoid policies that have such sublimits. I mean, the whole purpose of spending money and taking 10 lakhs is so that we have that freedom to choose 10 lakhs for whatever we need at that time. Correct? I think that's the reason we are taking it. So to not have that option doesn't make sense. So please, even here also, if it's a little expensive, still make sure that you take it only do basically avoid policies with disease sublimits. These are the three things. And let me tell you, agents in India, they are severely incentivized to sell policies with such limits because it saves insurers a lot of money. Insurers make profits not from the premium that they collect from us. They make profits by saving at each claim. One claim of 3 lakh. Okay, can I escape? Can I pay only 2 lakh? So this is the issue. This is because they're a profit making. Ultimately, they're all profit making companies. So you have to make sure that these three are not there in your policy, whether your agent tells or not. You must check this. Now let's look at the other side. What are three things we definitely need in the policy? Okay. First thing we need is consumables cover. So what are consumables? So when a surgery happens in a hospital, there are the disposable one-time use items like cotton, syringe, gloves, PPE kits, masks, blades, right? These are called consumables. Okay, that's what it's called. Disposables, but you can technical term is consumables. Now, many policies don't cover consumables. Consumables are quite expensive in hospitals. About 10 to 15% of a hospital bill will be consumables. So a 6 lakh bill, around 1 lakh will be consumables. So please make sure your policy covers consumable items. Otherwise, in a 6 lakh bill, that 1 lakh will go from you, even if everything else is perfect. Room rent, disease sublimits, no co-payment, still you'll have to pay that 1 lakh. So we can escape that, right? By making sure consumables is covered. Second thing to make sure, we've discussed this, modern treatments. Please make sure covers modern treatments. The list today, there are 12 things under modern treatment. I've given you two examples, oral chemotherapy and robotic surgery. There are 12 things, but this list, more and more things are coming into that. They are very high-end techniques, but they're expensive. So many policies don't cover. So please make sure. Third is renewal bonus. This is very important. So I told you that the costs are rising. Now, health insurance premiums usually increase with age. Okay. So if you have taken a 10 lakhs cover, if you take a policy without renewal bonus, it will remain 10. So every year you'll pay 10, 10, 10, 10, 10. Then after 10 years, when you want to make it 20, they'll say, no, sir, you can't now, too late. You have diabetes also, BP also, cholesterol also, you have had a heart condition, or some reason they not allow you to increase. And when you increase also, the premiums also increase. So better is to take a policy of 10 lakhs with a good renewal bonus. So yes, price may increase year on every time as you get older, price increasing, but that increases for all policies. So at least the good thing is when the price increases, your cover also increases, so that overall, over time, you are completely safe. Okay. So these are the three things to avoid in orange, three things to have. There are many other things that can be specific to your situation, but these are the general things that I want to say. I can only help you specially and specifically if we connect sometime. Okay. But otherwise, this is a more general picture, but it's useful, I think. And whatever happens, right, please stick to this template. Okay. Even if you get a very sweet deal with a lot of discounts or whatever, where all six are not happening, I would suggest to stay away. Okay. So first point is choosing correctly. Now, so this is good, right? So we know how to choose a plan and we know how to make sure to avoid some of the pitfalls. But the second question is a very critical question as well. Nobody talks about this is where should I buy this policy from, right? Where do I buy this policy from? So the policy you can buy from different places, you can buy it from you can buy it directly online, okay, or you can go and buy it from using with an aggregator, right? So directly online means you go to, for example, HDFC website, right? The second option is you go to an aggregator like Policy Bazaar. The third is you have an agent. This individual intermediary is like some agent that you know, right? That you are aware of. And the fourth is a company as an intermediary. Okay. So both are agents, three and four. Okay. So now to answer that, please remember, irrespective of where one buys a policy, there's actually no price difference at all, wherever you buy it from. This is a IRDA rule. Okay. So the cost, nobody can fight on price as far as health insurance is concerned. Okay. So the question I have is, if you were to buy a policy, let's say, you say, thank you, Rahul, for a session, understood most of these things. And, now I'm going to go and buy a policy or whatever, or if someone buys, which is the best? So now it's a tricky question. Okay. So for this, I'll give you an example. Okay. So to understand this, in India, policies do not cover dental. Okay. Dental treatments are not covered, but accidents are covered. So one clause is saying there's a lot of clauses, right? So one clause is saying dental is not covered. One clause is saying accidents are covered. So now the question is, if let's say someone were to have a accident and needs dental reconstruction surgery on their jaw, okay, they have jaw reconstruction surgery, which is dental. Will it be covered or not? Now, every time I ask a room full of people, half of them will say will be covered, half of them will say will not be covered. Now, this is a very simplistic example I'm saying, where two clauses are clashing. And the human body is very complex. Okay. In fact, health insurance is the only insurance where the maintenance of the body is also covered, right? Because if something goes wrong in my heart, in your car insurance, if something goes wrong with your engine or something goes wrong with your clutch, insurance will not cover. Insurance only covers accidents. But in health insurance, not only does it cover accidents, means physical harm, but it also covers the maintenance of the body, right? So a lot of there's a little few things that can clash. In fact, quite a few things can clash. So in this particular case, I want to tell you that it will be 100% covered, okay? Because in the rules of insurance, accidents are considered an act of God. So it is given higher precedence. And so even though dental is not covered, if dental is required for accidents, it will be covered. But in most cases, people don't know this. Insurers, so like this, multiple examples, insurers take advantage. They will first say no. After they say no is when then they go, then you have to ask them again. So for example, let's say the total bill was 6 lakh rupees. Okay. So first they will say, we're giving you 2 lakh, 4 lakhs we are not giving you because it's dental related. Please see page 3, point number 16. It's written very clearly that dental is not covered. Okay. Then after that, when you ask them, now imagine 10 people like this, 10 people who have the same thing, dental reconstruction surgery for the jaw. All 10, the insurer will say, I'm giving only 2 lakhs out of 6. Out of that, 6 people, when all 10 will ask them why, 6 people will say, oh, thank you for telling me dental is not covered. Okay, okay. I didn't know. I mean, I remember dental is not covered. Okay. So that's it. From 6 people, they're saved. Remaining 4 people who ask them a little more question, oh, is it an accident? I think accidents are covered. Then they'll say, okay, yes, accidents covered, but dental is not covered, sir. I will find out and I'll talk to my management. Then they'll come and give you 1 more lakh. Okay. Which you think will be very good, but still they are. So these kind of problems can happen. Okay. So the only way to solve this problem is to not handle insurance companies directly. You have to have somebody on your side who can help you. Now, so that is option 3 or option 4. Now, if that person is known to you and you know somebody very close, a friend, a family member, or someone who you can trust will fight for you if required, then you can go with option 3. Otherwise, according to me, the best is option 4. Both are good. 3 and 4 are good. The only difference why I've gone for 4, slightly over 3, is because of the power of influence. So the individual intermediary, let's take example HDFC. An individual agent in a month will sell maybe 20, 25 policies of HDFC. But a corporate intermediary is a company. It's also a agent. It's an agency company. Okay. So they will be selling 5,000 policies, all India, of health insurance of HDFC every month. So when the moment comes, no, when you need help, and if it's a 50-50 case and you want someone to push and have that influence, definitely a corporate intermediary is better. Now, just for your information, GreyUp, we are not a corporate intermediary. We are a senior citizens welfare organization, but we have gone very deep and we understand health insurance, but we have tied up because we want to help our seniors, whoever come to us for help. So we have tied up with corporate intermediaries and we sit with the senior citizen when they talk to the corporate intermediaries so that there is absolutely no confusion for the senior citizen. We ask counter questions also. Yeah, sometimes corporate intermediaries also they may not have all options, so we try to counter them and try to understand, right? So this is a good system. So we're basically like a foster child for a senior citizen. What your children would do for you, but this is a complex topic, so they may not be able to do it for you. We are doing for you. Okay. So that's it. Okay. So this is how it is. Please make sure that you have somebody on your side. It's a very lopsided battle. They have written the policy document. They know all the clauses. You only have paid premium. You have one document. And at that time, I've heard of very, very weird things in this line. But if you have a good intermediary and you have not lied to take the policy, nothing will go wrong. I have good case. There are multiple good cases also. So we have to be in the good cases, right? Okay. So this was for buying a policy. We discussed how to select a policy. Second, we discussed where to buy the policy. But what about people who already have existing policies? So there's a concept called policy porting. So just like you can port your mobile phone number from Airtel to Jio, same way, and your number remains the same. Here you can port your policy from one provider to the other. Okay, there are many reasons why you can port. And earlier people would never port because waiting periods would start again. But now when you port, just like mobile number remains same, here what happens is your waiting periods remain same. It carries forward rather. So if you've already finished 3 years for diabetes in your old policy, waiting, when you take the new policy, you're shifting, you're porting, that time the new policy will not have any waiting period. Okay. Just some caveats, but you can only do this at a porting window around 45 days, 45 to 60 days before the due expiry. So if your policy is expiring, say next June, you can't do anything today. Okay. You can only do something around April, May. Okay. Second is it gets harder with age. So this is one point I want to stress with everyone here, that if your policy is bad and if there is a chance to port, do it as soon as you can, because it's harder with age and harder with any illness. Any new illness you get, even harder. Don't think that they will still evaluate your health when they're porting. They'll cover from day one. There'll be no waiting period, but they will still evaluate, right? How you are doing, right? It's not that they won't evaluate. Okay. Next, different insurers have different specific conditions, so they're making it a little harder to port. Okay. So because this is a very high risk thing for insurers, from day one only they should cover everything that you have, right, without any waiting. So it's a high risk thing for them. So they are also looking for loopholes and putting some conditions here and there, uh, so that their premium goes up, or sometimes they will not cover. So you need a trained hand. And lastly, even if you if you review your policy now and port it to a good one, every 3 to 4 years you have to do this. And most senior citizens, this is the problem, that they buy a policy 20 years back and then unfortunately they just keep paying blindly. But then the policy was very outdated. Like it's like, imagine I have a mobile connection from 20 years back. It'll not even have internet on it. It'll have only phone calls, right? So such a basic thing like that, your policies may also miss. Okay. Okay, a word about corporate plans very quickly. Some of you may be covered by your kids' corporate plan, which is great. They are very good. Only problem is they're not stable. Okay. The coverage is a little low and it's not stable. And then if a kid changes organization or things like that, or takes a break or travels internationally, it will not cover. So that's why it's always good to have your own policy. And by the way, if you are covered by your own policy, but your kid has also taken a policy for you, I mean, covered you in their corporate plan, don't worry. It's a good thing only because multiple policies can be used for the same treatment, the same hospitalization. Okay. So it's highly recommended that you have your own policy. Okay. Okay, so just summarizing everything, this is what we want. This is the bill in blue color. We want the settlement in orange. We want the entire thing to come back. But first mistake we do is we buy policies with restrictions. So we should choose correctly, avoid deal seeking, and make sure you understand the features with a good advisor. Okay, make sure that you understand what you're buying and not buying wasteful features. I've seen people 65-year-old with maternity coverage. Now they told me it's anyway coming free, Rahul. What's the problem? But they don't understand. Nothing is free. The premium of a policy is the sum of the mini premiums of all the features. So the more features they put, the premium goes up. Okay. So that's the first thing. The second thing is, so if you don't choose correctly, automatically the orange color goes down. So you will only get this much settlement. Along with that, if you buy wrongly, that means there are these gray areas. I told you, subjective clauses, clashing clauses, things like that, where you need someone to be with you. And that is why you should claim right. And the only way to claim right is to source it smartly. Very, very extremely critical to source it correctly. And when you do that, a good intermediary will also talk to you about the company statistics. So different insurers have different statistics, track records of recent last, not just 1 year. You have to look for 3 to 5 years to see if they're consistent. Okay. So that's the other thing. Okay. And last but not the least, and especially for the group here, please do, there are a lot of these, clips and WhatsApp forwards and all saying insurance by A, insurance by O. Many of them I've seen, pretty much all of them I've seen, they give only half side story. Okay. So there are always some ifs and buts and some detailing. Don't fall for it. And also be careful of scams. Okay. So the second thing is that we'll see 1 crore cover, 5,000 rupees. It's not possible. Nobody can give a cover like that. So please don't fall for it. Always choose a good intermediary, choose a trusted person, and ask any insurance things to that person is the best way forward. Person or company, okay? Do that. That's the best way forward, because this world is, there's a lot of fake news and misinformation that's floating around. So be careful of that. Okay. So what do you do now? Just adopt this 5-step plan. First is, if you don't have a policy, please get a plan. If you have a policy, please ensure it gets reviewed. Ensure you use an advisor. Always maintain your documents, whether it's diagnosis reports, discharge summaries from the past. Always maintain this. You never know when you need, not only from insurance, also from a doctor's perspective. Keep photocopies in case you need to give originals for any claims. Always keep originals. Last but not the least, please remember, taking an insurance plan is only step one of emergency readiness. Most of the men here especially, please share things also with your partners, your spouses, your family, your neighbors. If you're living alone particularly, there's nothing confidential according to me in a health insurance document. It can be shared with anybody, because many times if you are in danger, you will not, the other person has no idea whether you have a policy. You have been paying for it for so long. Second, please make sure, already discuss which are the hospitals close by where your insurance covers. uh, Also make sure that so every second is precious, right? In an emergency, that is not the time to discuss kahan leke jana hai, where should we go. That's not the time. Okay. And of course, do preventive health checks as well, right? This is not a pass that we can use and go forward at any place. So lastly, a small thank you from our side. So we are just thank you for your time. I really appreciate, you guys could have done a million other things than listening to me today on this uh, complex, dry topic. So we are GreyUp and we do services like this. We Health insurance is one. We also help, as Ashwini was telling. We also help with taxes. We also help with will making, etc. But for everyone here, because as a small thank you from our side, we offer three free consultations for all attendees today. You can use these consultations for either yourselves or your family members or for your children. It doesn't matter. And what can you use this consultation for? One is if you want to review, any of your friends or you have a policy and get it reviewed, we will review it and do a call with you, half an hour call, absolutely no charges. In case you have already realized that your policy is bad and want help to port it, we can help with that. If you don't have a policy for some reason but now feel it's important to get one, or has not got one in the past for some reason and wants to again try one, that we can help. And also last is claim recovery, right? Some of your friends may be struggling with an insurance company to get their money back. And if they need some support, we can try, even though we're not officially their intermediary, but we can try to see and guide them on how to, they can get this. So you can use these consultations uh, uh, for anybody in your family.
Thank you so much, Mr. Rahul, for an eye opening and very practical session. Your insights on understanding the fine print on health insurance will surely help our seniors make informed decisions and avoid the common challenges many face at the time of claims. To all our participants, thank you for your active engagement and thoughtful questions. At Vaya Vikas, our mission is to empower seniors with clarity, confidence, and the right knowledge to live secure, independent, and joyful lives. Before we conclude, we have a very special reminder. You are warmly invited to Area Habba 2025, a grand celebration of golden years happening on 23rd November 2025 at St. Joseph Institute of Management, Primrose Road, Bengaluru. Enjoy a full day of cultural performance, senior-led creative and entrepreneurial stalls, games, arts, food and entertainment, silver gifts and prizes worth rupees 50,000. Entry per person has rupees 100 onwards. For those interested in putting up a stall at Iriara Habba, whether it's a art, craft, homemade food, hobbies, or any other product or services, you can now book your stall. Stalls are open exclusively for seniors and senior groups who want to showcase their talent, creativity, and entrepreneurship. To book your stalls or reserve your entry passes, please call 951 33 or visit www.vaya-vikas.org. We would love to see you there and celebrate this vibrant festival together. Thank you once again for joining us. Stay informed, stay empowered, and have a wonderful evening. Thank you all.
Thank you. Thank you, Vinay.
Thank you. Bye-bye.
Thank you,
Bye.
sir.
Bye.
Thank you.
Thank